With the determination to create more value from Nigeria's non-oil sector through agriculture than the usual dependency on crude oil, AFEX Commodities Exchange hosted the third edition of the Cold Cash Crop Session, which focused on the theme, Disrupting Agriculture Trade Infrastructure. Delivering the keynote, Olatomiwa Williams, the country manager Microsoft Nigeria and Ghana, highlighted the opportunities for scaling agriculture through technology and innovation in Nigeria and Africa.
As Nigerian government seeks to diversify and move away from a dependence on oil as a source of revenue, it has become important to explore ways to make farming in Nigeria more profitable, to encourage more entrepreneurs to consider farming as a viable means of livelihood. And for me, I speak to a lot of young people. They see agriculture industry as a huge opportunity, but it's important that they understand that with what they have on technology, they can actually make livelihood out of this industry in a way that is sustainable and compelling for them to really invest in. So there's a huge opportunity for us to leverage technology to drive that, and we can amplify the opportunities for everyone, irrespective of gender, race, location, to participate in digital economy.
The event featured incisive panel sessions which covered the following relevant topics: the present and future of agriculture commodity trade in Africa, de-risking cross-border transactions to simplify trade, and financing the emergence of efficient agriculture marketplace for Africa.
Most of the output from the agricultural sector actually gets wasted up to 50 to 40 to 60% due to post-harvest losses. Another challenge, which is like the chief of all the challenge, I think that's why we're in this room, is lack of access to finance. Now there's a huge there's a deficit of finance to agriculture up to the tune of 76 trillion naira. Now, this is a huge concern for us, and we at AFEX have also taken a few steps to try to address some of these concerns, starting with access to good quality storage facilities. We've actually secured up to 160 warehouses across the country, and we have a total storage capacity of close to 350,000 metric ton storage capacity. And we're taking these steps in order to ensure that we add value to the agricultural value chain by reducing some of those bottlenecks that have been identified.
Can you relate to some of the challenges is identified? And do you presuppose that there's some solutions you want to prefer?
Definitely, these are real issues in the agricultural sector. I think up until this week, I remember having a conversation with a bank, and they were speaking to stuff like around collateral for lending. And then I'm like, okay, I can give you commodity. And the bank says, no, commodity is not collateral. So, I mean, just even looking at that basic chain, like financial institutions not recognizing commodity, which is very liquid, as collateral, are some of the things that need to change in the agricultural sector. So, and obviously, there's obviously the need for identification. So one of the things that happens is before the banks will finance a farmer, you're asking for things like BVN. But then there are also realities in those spaces, right? So farmers who don't even have thumbprints, how do you get that in those locations where there is no network, right? And then the only way to issue BVN is to actually take a laptop to those locations. There's still no smartphone SDK to today. So those are some of the challenges that will obviously continuously limit farmers and the agriculture sector in being able to unlock finance.
Where can we find the nexus between technology, finance, and agriculture to find solutions that are lasting? Do you have any suggestions?
Specifically at Relief, we invent technology that is designed to take raw crops from the farm, process them so that their shelf life is stable, and also so the yields are higher. And this is an important aspect because if you can better process crops and get more of the valuable ingredient that you need, and you can reduce the logistics from the farm to your factory, you can then afford to pay farmers higher prices for their crops. If you're sitting from a factory's point of view, what you care about is your landed cost of the raw material. So the price that you pay the farmer plus the price that you pay for logistics. And so if you can reduce that cost of logistics, you can pay farmers more and you can incentivize farmers to do more productive farming, more climate resilient farming, et cetera, et cetera. And so I think we need to continue to work on that feedback loop between the farmer and the market that they achieve, and look for solutions that can, at the end of the day, increase the price that the farmer gets and the reliability that there will be an off-taker from season to season.
How can we use finance to address these issues? Are there ways we can structure unique products to meet these challenges that we just identified?
Are there solutions that can be structured to solve this problem? Absolutely. There are people that have the requisite skill and knowledge to structure these solutions? Absolutely. Is there a willingness to do it? Absolutely not. And the lack of willingness is a structural issue. There is significant risk in the agri sector, and banks, even though it's called risk assets, the bankers really don't like risk. Now, when you look at the alternative means they can deploy capital and make equivalent revenue with less risk, you would find why they would shy away from agri. Now, even though this is the case, what they should be doing, in my opinion, is structuring that sector so that it meets the minimum risk acceptance criteria that they can deal with. But there's a lot of issues around how the regulatory environment works. We had a Bank of Agriculture. Last time I looked at their books in 2016, 2017, they had a loan loss ratio of more than 90%. Now, that does not mean the agri sector is bad. It just means the loans that were given to the agri sector were structured badly. That's an issue of bankers, not an issue of the sector. But notwithstanding, what are the key risks in financing agri? Like Nancy said, when you have 50% of your product going bad, it means that there is a risk to 50% of my capital if I lend you the money, which means I have to take more than a 50% haircut if we do not sort out the transportation issue and the storage issue. Now, as a bank, would I want to take that risk? I wouldn't. So what AFEX is doing is crucial in terms of sorting out the logistics along the value chain. If you reduce the loss from crop production, then it reduces the risk sentiment of the sector. The other thing is the sector, people like Ayo that have done this for a while and done it successfully, we would need to demarcate the grassroots agri people from the industrial agri people, because the risk profiles are very different. And what would then happen is people like Ayo would then Ayo and AFEX would play a more significant role regarding aggregation of the sector. So it's easier for a bank to deal with AFEX or to deal with Thrive Agri than to go into a farm in Nasarawa and deal with somebody with 100 hectares of rice farm that you can't even access. There's no internet, there's no smartphone. So this agri sector, the entire value chain needs to be restructured. In my opinion, that restructuring needs to be done by bankers. They need to take a keen interest. Unfortunately, the regulator has removed that interest from them by funding the agri sector directly with all the intervention and all that. Now, the central bank is not equipped to give loans to a sector, but they're doing it. So there's no incentive for the bankers to go in there and fix it. So it's a structural issue that we need to deal with. There are solutions that we can use. And just to throw in as an aside, there's a solution that's just been created that will make this financing seamless. It creates a marketplace, but the structure of the sector will need to change, where we have to document the demand using purchase orders. Once we can do that properly with what AFEX is doing, then you find that financing into the sector would improve.
Highlight of the event was the captivating hackathon pitches by young emerging agripreneurs. WebTV engaged a keynote speaker, a representative of AFEX Commodities Exchange, some of the panelists and students of agric economics in Nigeria's tertiary institution on how the Cold Cash Crop Forum can catalyze the growth of agric sector value chain.
Agriculture still remains the largest employer of labor in Nigeria and contributing significantly to the economy. But there is still a huge opportunity in that space using technology to help farmers and the ecosystem to be able to improve on food security in Nigeria, leveraging technology like artificial intelligence, data analytics, drone technology to facilitate transformation of the agriculture industry in Nigeria. But of course, that also requires, skilling people to be able to see what is possible to solve for local problem using technology. So basically, yes, the agri sector, there's some improvement because we are seeing some e-agric solution, but with the youth population in Nigeria and the appetite to leverage technology to solve for local problem, there is still a huge potential that we can tap into to help to improve on what we have and continue to build on that momentum.
I think definitely there needs to be more solutions in the space. I mean, it's 32 million farmers in Nigeria and we're still on 300,000. So there needs to be more to figure out how do we get finance to the farmers, how do we create structured products that the financial market understands and respects. There was also, of course, the situation of security in the country. How do we fix things around kidnapping and banditry, which is like super important to ensure production keeps growing. But I think all in all, like conversations are good. We're seeing great interest from the government, organizations like the CBN, and I think people would go out thinking about how to do more, basically, and I think that's definitely useful.
We need technology to improve to the level where it's so basic for people to be able to move their agri products from one place, store it to the final market. Number two is the finance. To be able to allow people to be able to move their products from Nigeria to Ghana to Benin Republic to Kenya, we need to have a centralized and efficient payment system. And that is what PAPS has been doing. The Pan-Africa payments and settlement system, which the AFEX has been trying to initiate. That's going to play a very, very critical role. And I think the final bit of it is the policy, the policy by governments. I mean, there's still a lot of concern that as the technology improves, there may be that pushback, from the regulators when they don't understand what the market is trying to achieve. I mean, the example was made of crypto. We also have a lot of issues with a lot of, I would say, Ponzi schemes that are coming up. So we need to ensure policy is out at the appropriate time and at the right decibels so that it doesn't shut out innovation in the system.
There are a lot of things to be done. There are a lot of innovation. There are a lot of responsibility that still needs to be done on the part of every stakeholder in the sector. And as youth, it is our responsibility to carry on the job of advancing food security, the job of propagating the gospel of agriculture and why people need to get involved in this sector.
Agriculture contributes a lot to the ecosystem in the country. And the question is, how do we increase the value and how do we unlock more and how do we make the capital as inclusive and wide as possible? By the time when you look at the data, you discover that more and more people are shying away from agriculture because most people perceive it as poor people's own or it's for the elderly. The other thing this platform now serves to achieve is attract younger people into the ecosystem, which is why we have the hackathon track in place where you get smart young people creating innovative solutions across agriculture. It could be core agriculture, it could be core financing, it could be core technology, but being able to fuse this together is the value we seek to unlock. We believe there's enormous and immense potential in the ecosystem, and it's events like this that brings all of them together to unlock these values.
As Nigeria grapples with foreign exchange inflow challenge, unemployment and rising poverty, a synergy between agriculture, technology and finance cannot be overstated. In a simple analogy, smallholder farmers who constitute a robust group and receive financing to deploy relevant technologies can achieve scale and boost productivity in the economy.